We've got Hick Cederblad with us again from Ausbil, and we're calling this the coronavirus series with regard to education. What we're trying to do with Hick is, and as you spoke with Bill the other week, is trying to get through just some slow but sure education to keep information going out to the clients. So today is about some basics like what might make shares go up and down, and then further to that, how a fund manager might take advantage of a big movement within a day. So we were just talking off camera before. March the 20th started the day down nearly 7%, finished the day up over 4%. If you'd turned on your computer at 5 p.m, you would have said, oh, well, the market's gone up 4%. Whereas in reality, during that day, it went up nearly 12%. So if I could just throw over to you just with a bit of why shares go up and down, and then also maybe how an active fund manager like some of Ausbil's funds might take advantage of the swings in the day.
Well, sure. Thanks, Brett. Clearly right now in this current market environment where there's extreme amount of volatility, we're seeing a lot of these type of swings that you mentioned in your question. And it's not just that day, it's been on numerous days where we've had intraday swings, which you won't necessarily see at the close, because, we've had days when the market's ended flat, when the market's been up or down 4 or 5% earlier in the day. So as a fund manager, we're investing into individual stocks. So on these days when you get these significant movements, stocks that you like may fall to prices where you want to pick up the stocks. Yep. So we're ready. When I've spoken to you in the past, you guys in the past, I've said that at this time we're running a little bit more cash in portfolios than we would normally do so, and it's exactly because of this, so that we can take advantage of big price movements, which we're getting. We're getting the big price movements because it's extremely uncertain times. So markets are extremely sensitive to any piece of news. So often it's things like the US stock market futures, or the price of oil is moving during the day, or there's an announcement in terms of infection rates or so. So the market's very volatile, and that just provides opportunities for stock pickers and fund managers to get into stocks at attractive levels.
Okay, and going back to probably the why ups and downs as well for some of them, I remember reading a Warren Buffett article once that he said, when you're investing in shares, think of it like you're investing in companies rather than pieces of. So, you're trying to predict where you think that company is going to end up rather than look at what the share market as such is doing. And, obviously that can lead to quite big movements up and down for some shares as the economy makes that company look a lot different than it was.
Yeah, absolutely. And that's why, you get, even when the market may on the surface not be doing anything, you look at individual stocks and they'll be reacting to developments which affect those particular companies. So, right now there's some talk around how landlords, in particular with retail properties, are going to have to treat tenants given what's happened to retailing, and that's going to have a material impact on real estate investment trusts, for example. So yep. There's all sorts of factors which can cause stock prices to move, and so that's where those prices are moving, because of the changes in news flow, announcements from the companies themselves. So this happens in regular markets. So as I said, often it's that perception that things are calm when in reality on a stock level they're not. And prices are moving a lot.
Mate, much appreciated. And as always, your time is valuable, and we thank you for it.
You're welcome. Anytime. Thanks very much, Brett.